This is the moment where your trading can actually change. Because once you understand how market structure really works, you stop guessing, you stop forcing trades, and you see the market with more clarity. But before we dive deeper into this video, let's go quickly over the basics. So welcome in on episode 2 of how to becoming a prop trader in 2026. Today is all about market structure, and you can already see right here that I have here 2 pictures. And when I go here quickly over the basics, you can see that on the left hand side we have an uptrend, and on the right hand side we have a downtrend. Now these 2 phases are imbalanced phases on volume profiling. Because the market is not balanced, we can see that the market just trending up and here trending to the downward side. Now pretty straightforward, we're making here higher highs, higher lows, higher highs, higher lows, higher highs, higher lows, higher highs. On the right hand side we are making lower lows and lower highs, right? So pretty straightforward. You can quickly spot an uptrend and a downtrend on the markets. So the imbalanced phase is 30% of the time. You get the 30% chance that you catch an uptrend or a downtrend. So the next scenario right here is just a range, right? So we are just going sideways and we are balanced. So the balanced phase is 70% of the time. So now you know that 70% of the time the market just chops around. Now that's all basic stuff right here. You've probably known that before. Now when we go here a little bit lower, we have market structure shifts. Now I have here 2 pictures and we talk about rollover top and rollover bottom. What I'm meaning now by rollover tops and rollover bottom is when the market just, as it says, rolling over. Right here, rolling over, right? I don't want quickly push up and then a down and push up and then down, right? We are always looking for rollover bottoms and rollover tops. That's easy to spot when you look at the market and can see that the market just slowing down, right? Gets no acceptance further to the downward side and then just rolling over, right? Same thing right here, impulse up and then just slowing down, right? Gets no acceptance above and then just moving to the downward side. So that's rollover bottoms and rollover tops. Now that's all right here what we are watching on market structure. So if you want to make a screenshot, then feel free to screenshot this right here, or the range phase, or the rollover bottoms and the rollover tops. But let's now jump on TradingView and I show you some examples. So we are right here on TradingView, but let's make the volume profile here away. So let's put this away and let's get a clean chart. Now market structure, you can do this on multiple time frames, right? So if I'm here on the 5 minute, you can do this as well in the 1 hour, 4 hour, daily, weekly. No matter what, market structure works on every time frame. So let's focus now on uptrends or downtrends, and then I'm giving you a secret sauce that you can implement this on your daily trading. So let's just focus now on this scenario. So you can see that we are just going from this extreme right here to the downward side, and let's just mark out the extreme points right here. So these are the extreme points where the market quickly decides to just move to the downward side and quickly decides to move to the upward side. Now it's pretty straightforward, guys, right here, that we quickly decide that this is a downward trend, right? So in hindsight, for sure, yeah, but when the market is right here, then you can see that this one right here is a downward trend, right? And what we are doing right here is just mark out the highs, right, and the lows. Because most of the time you get caught up in this market structure shift bullshit that's all over the trading space right here. Because when we see right here, then this is my high, right? And this is my low. And when the market goes here up, right? Most of the time guys say then, oh, right, that's a market structure shift because we break this, we're making here higher low, right, and the market just changing now the structure to go to upward side. That's completely rubbish because we are still in this downwards phase. So when the market don't breaks this line, then we are still downwards trending, no matter what the market does in here. The market can go here sideways the whole time, and we will be still in this downwards phase until we break this line and make here structure to the upward side. Then we changing the market structure. But right here, we are still in this phase, in this downwards movement, right? So that's pretty easy. You just mark out the high and the low, and when the market don't breaks this, you're still looking here for shorts, right? So that's on a downwards trend. When we go here a little bit further to the downward side, we can see now that the market structure is shifting, because that's your last high right here, and that's your low. So you can see in this phase we are still in a downwards phase until we break this high right here. And when I extend this right here now with a zone, you can quickly see that when we break this high and putting in higher highs and higher lows, then you have a confirmed reversal right here. You have a confirmed rollover bottom. You can see how the market is just rolling over, right? And then we break this neckline, let's say right here, and then we are just making higher highs and higher lows. So that's crucial to understand, that when the market, especially right here as well, when I mark out this low and mark out this high, when the market is not breaking this zone, we're still looking for higher highs and higher lows. So the market can do anything right here. We are looking for buys, right? Because I'm for sure traders would look here to sell, because they marking out this right here, right? So the market makes here a higher high, a higher low, a higher high, and so we are breaking structure, and now here is my first lower high, right? And then they are looking here for their shorts to create here a new lower low. But that's not true, because we are still trending to the upward side. If you're not sure, then just zoom out and you can see right here we are just trending to the upward side. So that's not a smart way to look here on your short positions, right? So I can do this all over again right here as well. You can see this. This is my last higher low right here. The market comes here up, right? And when we break this low right here, then we are shifting in structure. When I extend this then to the right hand side, you can see that we actually get a clean retest right here, and then we are just ranging to the downward side. Let's go here a little bit lower. You can see that this right here was the last lower high that the market made, right? You can see this right here clearly. We're making here lower low, lower high, then we make here equal lows, then a lower high, and then an aggressive push to the downward side. We are ranging around. We don't get acceptance below this level right here. We actually sweeped it, and then you don't look here for longs. You just wait that the market gives you confirmation. You can see that the market pushes outside. We get actually a retest as well, and then pushing to the upward side. You can do this all over again. Now, when we go here a little bit to the right hand side, we can actually now see that we have a balanced phase, right? You can see this, the market just balancing. We're trading fair value right here and just trading on the extremes and trading down here to the extremes. We don't get acceptance above, we don't get acceptance below. Now this is where breakout traders come in, right? Because when you can see right here, the market just get a candle close down on this box. So traders stepping in, stop loss above here and just targeting a lower value. You can quickly see that the market just go back into balance and we are just trading fair price again. You can spot breakouts when we actually make a higher high and a higher low. When I extend this here to the right hand side, you can see that the market breaks outside right here, making higher lows. You can see this quite well right here when I draw here this line, and then we get the breakout. And then again, we have a balanced phase right in here, right? The market trading fair value until we break out. So that's crucial to understand in what phase we are. Are we in a downwards phase, in an imbalance phase? Are we just balancing out, or are we in an impulse to the upward side, right? here, right? And that's crucial to mark out. You can quickly then understand in what phase the market is currently, and then you can either wait for breakouts or just trade here the extremes, right? Or just trading with the trend, right? So that's the three phases right here. And now I'm giving you something that you can replicate, that you can do this every day when you are just price action trader, let's say. It's such a powerful setup. When you're just focusing on P or B shapes, that's a scenario with volume profiling. So I will quickly explain this to you, what I'm meaning, and then I show you some examples. So when I say P and B on profiling, it's really not complicated, because what we are searching then on the market structure is just an up move, a range, an up move. On a B shape, we are just looking for a down move, a range, and a down move. Right, so that's all we are watching on market structure. Now, when you see an upwards trend and we make a P shape, right? So let's say a move up and a range. Let's mark this out. So we have here this move up, right? And then we have here this range. So let's just mark out this range. You can see that the market pushes here up and makes a range. So now the market right here is in a balanced phase. And when you spot this, you can mark this out with a zone right here, and you know the big picture is to the upward side. So now when the market tries to break balance to the downward side, moves back into fair price, then you can trade this long. And this is a really great setup, a really strong setup as well, because as soon as the market finds no acceptance down here and we trying to break back into balance, you can trigger here long, take profits on the top, let something run or add to your position to see if the market accepts above the price, buyer stepping in, and you can ride this to the upward side. So that's such an amazing thing. And you can do this as well if you get something like this right here. Right, so let's say the bigger picture is clearly to the upward side. We can see the market just making higher highs and higher lows, right? And then you get here this big correction, you get this impulse down right in here, and then you get this B-shaped formation. You can see this, that's a B-shaped formation on volume profiling. Let's just mark this out. So you have here this move down, you have here the range. Most of the guys out there would now look here for selling position, but when we look out for the bigger picture, always zoom out, guys. Really, always, when you're not sure, zoom out, and you can clearly see right here that we are just going to the upward side. So there is no way that I'm looking here for a short example, right? So now when you look at this, you can play B shapes as well when the market trending to the upward side. So what we are seeing right here now, as soon as the market tries to break balance to the downward side, what we are getting, no acceptance further to the downward side. No acceptance, the market breaks back into balance, that's your trigger to go long, wait that the market just breaks out or take profit on the range high and just ride this trend to the upward side. So in this phase, most of the traders, I guess, will be selling, right? So on this breakout as well, they will be selling. On this fair value gap right here, they will be selling, right? So you get here a little bit of a move down, but then the market quickly decides to push up because the bigger picture is to the upward side, right? So you can now see when you just mark out balanced phases, how it helps you on trending markets. Now, I say trending markets, this right here that I'm teaching you only goes 30% of the time, because what we learned before is that when the market is in an imbalance phase, that's only 30% of the time. And when the market is balanced in a range, that's 70% of the time. So you not get often these trades, you often get a ranging phase. So let's just find here a downwards example. So you can see the market has clearly here this rollover, right? So we're rolling over and goes to the downward side. Now what we have down here as well, you only, as I said, could be looking out for these boxes. You just mark out, let's just mark out here the ranges, right here, the ranges, and let's just focus now on this downwards example. So that's pretty straightforward, right? So we have here this massive B formation, the market ranging here around. So now how you can play this range is, first of all, mark out this box, right? And when the market pushes to the upward side and you just wait that the market breaks back, that's your trigger line to go short. You don't look here for a reversal to the upward side. You don't look here for a buy. You just wait that the market breaks back into balance, and then you can play the trigger sell right in here and just go break even or take some profits and ride it to the downward side. But in this case, we're just breaking down, gets a retest, and then just slowly grinds to the downward side as well. Now what we have here, again, a B-shaped formation, right? Range, breakout to the downward side. Now again, we are looking for a P-shape on a downwards trend right here. What we have is this push up, right? And where is our box? Right in here. So you would probably say that's a P-shape. Wait a minute, a P-shape should be bullish, right? It's a bullish setup. But zoom out, guys. We are clearly trending to the downward side, and as I said, P-shapes working on a downwards trend as well, and the B-shape working on upwards trend as well. So what we having right here, this P-shape formation, and what we have right here is this range. So always when the market is ranging, mark out this zone. What we can see, the breakdown, the retest to go lower. That makes trading so much more easier. And I'm giving you here really a good trading strategy if you only trading price action. That's combined right here with volume profiling, right? But you don't need a volume profile. You're just looking out for P and B shaped formations and you are good. Now when we are looking now for reversal trades, now what we have right here is this rollover bottom right in here, okay? As I said, guys, the market structure right here is clearly to the downward side. We're making here lower lows, lower highs, lower lows, lower highs, lower lows, lower highs, lower lows. As the market comes here down, you can see if we mark out this right here, the market comes down, sweeps this low and gets, first of all, this pretty massive push to the upward side. But what we have here right here again is this range. Now let's just mark this out again. So we have here this push down and we have here this range. Now for sure right here probably looked out for a selling position. But what we have learned before is either the market breaks out, breaks back in, you look for sells, or breaks out, makes a retest, looking for lower value. In this case, we have here this sweep, right? Market finds no acceptance below, and then we are massively breaking out to the upward side. And as soon as the market makes higher highs, higher lows, higher highs, higher lows, then you confirming that you have a market structure shift, right? We have no clue, really no clue if the market is now on an upwards trend, right? We cannot say right here, right? Just make here this line, and when the market breaks right here, we are looking for longs. We only can be for sure if we get here this rollover bottom and the market decides then to put in higher highs and higher lows above this range, because the market can quickly decide right here on this push out, we breaking back in, right, and looking here for the fair price again, and then just breaking to the downward side. So that's a really cool trick that you can implement this today and see it for yourself, how it helps you with market structure. I do this again right here. We can clearly see the market trending to the downward side. And again, you can do this on every time frame. What we have right here is this massive push down, and what the market is doing right here, let's mark out this with a zone. We have balanced phase, right? That's an balanced phase right here. That's an imbalance phase, balanced phase. What we can see now is that is exactly this right here that we don't get right here, right? So let's zoom right here in. As soon as the market breaks out, gets no acceptance, making no higher highs and higher lows, market decides to break back into fair value, That's your trigger candle right here. You're looking for the other side of the balance. Make sure to take some profits, or if you're a little bit aggressive, wait for the breakthrough and then adding to your positions and ride this trend to the downward side. You can do this all over again. Just mark out your balance phases. Your balance phases right here, right? You can see this. Your balance phases right in here. And now just watch what the market is doing. Pushing down, balance phase. Push down, retest, push down, right? Balance phase, push down, makes a balance, push down. Right here, makes a balance phase, pushes up, finds no acceptance above, pushes back into balance, pushing further to the downward side. Now for sure I have said the market is in 70% of a ranging phase, and you can see this right in here when I mark out this zone, right in here. You can see that the market is just ranging around, and when you trade with volume profiling, let's just mark out a volume profile right here, let's say to here. Then you know that you just trade the extremes. So you're looking out for selling the highs and buying the lows, right? And you do this as soon as the market accepts higher value or lower value. Let's just draw this right here out, and you can see the extremes are here perfectly to trade, right? And so if you're seeing here a high range or a ranging market, just make sure you have here fixed volume profile, mark your range out, and then fade the extremes. You look out for selling the highs, mean reversion back to point of control, mean reversion back to point of control, mean reversion back to point of control. So that's really all, guys. So I hope you found it helpful. If you do so, leave a like, leave a comment, subscribe to my channel, and we see us in the next video. Peace.